Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, October 28th, 2021, and I'm pre-recording this Trading Places Live for just a bit later this morning. Currently, we do have futures up. Market looking pretty good this morning. Let's see, at last check, I don't know, maybe 10 minutes ago, Dow futures up 66, S&P 500 futures up 14, and NASDAQ futures up 89. So on a relative basis, it does look like the NASDAQ could get off to a pretty good start this morning. We've got the 10-year Treasury yield trying to bounce back a little bit. It's been on a losing streak of late. It is up 1 basis point this morning to 1.54%. We got crude oil down almost 2%, back down close to $81 a barrel after challenging the $85 a barrel recently. So that's down about $1.50 this morning. Let's see, what else do we have? We got gold, which is up a few dollars, silver down a fraction, copper up about 6 cents. So that's about 1.3%. And anytime you have copper going up, that's a good sign for the market. Anyway, we're going to get into a lot of that in just a minute. Let me run you through today's agenda. We're going to start off with the daily market recap. As we always do, we'll get into talking technically. I'll run you through the 11 sectors. Then I'm going to get into scanning strategies. I'm going to show you one way that I would maybe take a look at breakouts each day, looking at the 52-week highs. I'll show you how you can modify a predefined scan to maybe zero in on some of the things you're looking for. Then we'll get into the earnings spotlight and wrap up the show with the 3 you must see. Before we get into any of that, let me take you over here to Earnings Beats. You can just go over to our website, earningsbeats.com, scroll down. Love to have you join our community. The Earnings Beats Digest, this is our free newsletter, published 3 times a week, Mondays, Wednesdays, and Fridays. All it takes is a name, email address, hit the subscribe button. No credit card required. You can unsubscribe at any time. A lot of earnings-related news that I post, especially this time of the quarter as earnings come out, looking at various sectors, industry groups, that sort of thing, maybe some seasonality, candlesticks, just things that are important to us at Earnings Beats. I think it'll add to your trading arsenal or investing arsenal. Sometimes these are more investing topics rather than trading. I think it'll be a good addition, and it's very, very quick read. A couple paragraphs in one chart and you're done. Probably can look at it in about 2 minutes. Anyhow, just wanted to point that out. So make sure you go over to earningsbeats.com, sign up for that. Also, anyone who is an Earnings Beats Digest subscriber is invited to all of our free events, and we send out room instructions to everybody who is subscribed. That's another reason to be on that list. All right, let's move on to the market recap, the daily market recap from Wednesday. Got the Dow Jones Industrial Average down 266 points, S&P 500 down 23, NASDAQ flat, mid caps down 1.5%, small caps down 2%. So pretty big drop in both of these areas. Yesterday, the sectors, we had discretionary stocks, the only group above the zero line. So the only one of 11 sectors that was higher was discretionary. I will mention, though, even though they lost ground, technology and communication services were the next 2. So even though the market was down yesterday, money was actually skewed a little bit more towards the aggressive groups, which was good. As far as the losers from Wednesday, energy took a pretty big hit, down almost 3%. And you can see the energy got a little negative divergence here as we've been moving up. That momentum to the upside looks like it's been slowing. So I wouldn't be surprised to see more weakness. I mentioned top of the show, crude oil down again today. I think we could see a move back down into the low, 52, 53 area on the XLE. It wouldn't surprise me. So if I was a trader of these sector ETFs, this is one I'd probably be underweighting at this point. Financials also taking a pretty big hit yesterday. The 10-year Treasury yield, as I mentioned, has been on a losing streak. That's starting to weigh on some of the financial stocks. We'll see whether or not we can right the ship on those yields today. Materials down about 1.4% yesterday, right up against resistance, failing. But we do have a golden cross to 20 coming over the 50. So maybe the 20-day is where I'd look for a little support there. Industrials also a rough day yesterday, down a little bit more than 1% after testing. overhead price resistance coming back down, just like the XLB, very similar setup here with that recent golden cross. I would think the 102, 103 area is going to be pretty good support on industrials. I'd actually maybe look for a bounce at some point today or tomorrow. All right, let's take a look at the 10-year Treasury yield here. And you can see on this chart, this doesn't update for this morning, but we closed yesterday at about 1.53%, closed back down below the 20-day EMA. And we do have a slight negative divergence here on the yield, higher prices or higher yields and then lower PPO, but it's not from a real extended area. For instance, you can see the PPO was up over 7.5 here when we started setting these negative divergences, and that ended up resulting in quite a bit of weakness. Now, I would have expected that 50-day test, and that's what we did, and then we consolidated, but then ultimately we broke down. Anytime I get a negative divergence when I've got, I'm trying to find one that actually panned out. Maybe this one a little bit where you've got slightly higher price, although I don't know if it closed higher, but we had a lower PPO, and all we did is just went down and sideways for a while. That's kind of what I'm looking for here. I mean, maybe, if I annotate this real quick, you've got that price or yield support area at about 137. Whoops, didn't want to do that. And then we've got trend line support that maybe comes up here, something like this, connecting these lows. So there's no doubt that right around 137, 138 is an area I would watch to the downside. I mean, we certainly could go down there. Negative divergence, just going down to the 50-day SMA, that would be down to 143. So I think somewhere in this 137 to 143 area is where we should find support if we continue to go lower. But what we might do is just simply go sideways here, kind of like we did all the way back in December of last year, where as we went sideways, we got closer and closer to the 50. The PPO got close to the center line, and then we started to launch from there. That's very possible. So we might just go sideways. But because of the negative divergence, I wouldn't expect that we'll just go straight back up. I would think maybe at least a few days of sideways action, maybe even a little bit more downside action. But at that point, I would start to begin to favor the financials, because financials, you can see on a relative basis, have been coming down ever since we've been trending lower. When we were trending higher on the yield, financials outperform. So once we, as we get closer to this 140 level, if we do keep dropping, the closer we get to about 140, the better I think financials will probably look on a relative basis as they pull back. So something to keep in mind. All right, let's move on to talking technically. So in talking technically, I wanted to go through real quick the sectors, but I will start off with the S&P 500 and just show you that we did actually break out. And those 4 days that historically are bearish for the S&P 500, the 21st at the close, we were 45.49. The 27th at the close, we were 45.51. So we gained 2 points. It seemed like it was a lot more bullishness than that, but then the reversal on Tuesday and then yesterday's selling took us almost right back where we started the period. That just is a period where we can be a little challenging. The good news is that from now through the end of November 5th is the most bullish period of the year. So it's really weird how the market works historically. We go from the worst 6-day period to the best 9-day period of the entire year on the S&P 500 dating back to 1950. So this isn't just over the last couple of years or something I've noticed for, this decade. I mean, we're talking about 7 decades, 70 years of performance on the S&P. We just ended the worst week, and now we start the best 9-day period. So we'll see what happens here. All right, so that's the S&P, and that's what we kind of are looking at as we move toward the end of October here and right into the heart of earnings season. Technology, I'm going to go through these pretty quickly, but we've got what I think is a cup and maybe a little handle. So I'm looking for a breakout here. On a relative basis, look for a breakout above that September high. That would be bullish on the XLK. XLY, you can see the relative strength has been very solid now for over 2 months. The breakout is just adding more fuel to the fire. That breakout above 185, 186, it's been a straight up move to 198. And as I mentioned, consumer discretionary, this was the only group that was up yesterday. So there's no doubt that money has begun rotating here over the past 10 weeks or so into consumer discretionary. I think this sets up for a nice quarter here for this group as well. Communication services downtrending. When it gets back up above 82.5, let's start talking again. But for now, it's downtrending on a relative basis, very weak. XLI industrials. Well, look at the tops coming in here at about 105 to 106. There's no doubt we get a breakout above 105, I would be overweight industrials. And we know the month of November is very strong historically for industrials. So the aggressive play would be anything close to the 20-day jump in. And I say it's aggressive because we haven't broken out yet. We could simply go back down and go back to 97.5. Just because November historically is strong doesn't mean it's going to be strong November 2021. So, I like the odds, but just know if you're buying here on a pullback, I think it's a little bit more risky because we may or may not get that breakout. I think a better play would be on the breakout, but we have to wait to see if we get that. So anyway, XLI. Then we got the XLF financials. Financials did break out. They're pulling back. PPO looks good. I would expect to bounce off the 20-day there. Then we'll go into the more neutral areas, which I consider energy and materials. It really doesn't matter what the overall market is doing. Energy and materials kind of move on their own schedule. Some of it's dictated by the dollar, whether the dollar is strong or not. But right now we've got a strong energy group, but I did mention slight negative divergence right there. So be careful if we don't hold the 20-day. It could be a 50-day test coming up. You can also see the relative strength starting to roll back over again. We never got a breakout on relative strength, by the way. So absolute strength broke out, relative did not. And that's one of the problems I have with energy. I just don't think that it's going to be a good long-term performer on a relative basis. And when I say long-term, I'm still talking about the next 6 to 12 months. Materials haven't broken out yet on an absolute basis. You can see relative strength hovering near a 52-week low. So this is a group I would be very careful with until we get a breakout. Then we can go into XLV, the defensive areas, although there are parts of healthcare that are more aggressive, like biotechs, medical equipment a little bit. But then you've got pharmas, healthcare providers. They tend to be a little bit more conservative, a little bit more defensive. Anyway, healthcare, which was leading back in August, last couple of months, taking a back seat on a relative basis. We just went down, approached the 52-week low, trying to bounce now. We need to stay above that 20-day moving average. XLP, it's been strengthening a little bit on an absolute basis, moving through the moving averages, but the relative strength is horrible. And this actually is good because consumer discretionary on a relative basis going up, consumer staples going down. That's the configuration you want to sustain a bull market. So I think that looks good. XLU, not able to get a breakout, very similar to the XLP, trending lower. And then you got real estate. Real estate's done a little bit better here of late, but we've got overhead resistance trying to negotiate. And we've just been going sideways now for the last 4 months relative to the S&P 500. I don't like that candle from yesterday. I expect we'll probably see more underperformance coming in the days ahead, probably at least pulling back to test these moving averages. We'll see. Anyway, that is your talking technically. Let's move into the scanning strategies. This is an interesting segment because I'm going to just show you how you can kind of use some of the predefined scans at StockCharts and then some of the tools that we have at Earnings Beats to kind of figure out your own scan to come up with some great trading candidates. So I'm going to start first with hit this more button in your scans on your dashboard. Now, if you don't see your scans on your dashboard, it's because this gear shift right here, you got to bring it up and make sure it shows scans and alerts with a check mark. If that's blank, it's not going to show up. So make sure that's checked. Then when we come down here, then we'll see your scans, your alerts, and under your scans right here in this more area, predefined scans. Now, what I'm going to do is I'm just going to bring up the new 52-week highs. Yesterday wasn't a great day, so there weren't a whole lot, but 99. So we'll pull this up. And then I always like to click here to edit the scan. So this is a great way to start if you're just learning about the scan engine. Pull up a predefined scan, click this, and then you can practice just by editing these scans. So one thing I'm going to do here, this is the New York Stock Exchange, but I also want to add the NASDAQ. So what I can do is come down here and hit Exchange, Add, and it'll come up with New York Stock Exchange as the default, but I want to type in NASDAQ. Now, what I want to do is look either or at the NASDAQ or the New York Stock Exchange. So I need to move this up. I'm going to copy, and then I'm just going to come up here. Whoops, right there. And I'm going to paste. So now I've got exchange equals, and then I need to type in and. All right, but I don't want this and. I want it or. I want it to be or. But right now the scan engine doesn't know or, which ones. That's why I got this little caution sign over here. I need to put brackets around the two that are ors. So, whoops, wrong way there. So before the New York Stock Exchange, after the NASDAQ, now it's gone. So now what I'm saying is this scan is now any stock that's on either one of these two exchanges. That's why I need the two brackets between these two. So it's either on the New York Stock Exchange or it's on the NASDAQ. And then I'm going to change 50-day average volume. I want to do at least 200,000 shares. And I don't need this anymore. And it's 52-week high. Now, the one thing I would add here is I would go in here and add a scooter. Because one thing I like to do is to find stocks that maybe haven't been going straight up. So I'm going to say the scooter's under 90. If anything, if you got a scooter over 90, chances are, you could run all of them and see what you got. But I'm just going to make it so the scooter's under 90. So it probably hasn't been consistently making 52-week highs. Not like some stocks, which just seem to go up every day. So here is the scan I'm going to run. So I'm going to run this. And I get 63 stocks. So I'm just going to download it. I'm going to replace an existing chart list. And I'm going to go in here and just drop it into scan results. 50, well, no, I didn't want that. I wanted the 52-week high. It says scooter 60 to 90, but I know what we have in here, 52-week highs. All right, so now I've just replaced. So now I have a scan, or I have a chart list. So now what I can do is I can go in and create a new scan. And I can run a scan against that chart list. And that's what I do a lot at Earnings Beats anyway. We have a lot of chart lists. We do a lot of research for our members. And so we can have scans run. Let's just pull up a new one here. Now, I've already set all this criteria. I don't need any criteria because I'm going to run it against a chart list that I've already created. So I just want to know certain things. And the things I want to know, there are some key areas of the market that I'm really interested in. So let's go down to technology. I want the semiconductors. I'm just looking for some of the groups that I'm really a big fan of. Software. I know in financials, insurance brokers have been really hot. So let's pull up the insurance brokers. And I'll show you how I run all this in just a minute. Let's do autos. Now, autos have certainly been hot. What else do we have here? There was other areas. Well, we can do specialized retail or specialty retail. And then what else? Anything else? I know I've seen some pretty good reports coming out of healthcare providers, so we'll just add them. All right, anyway, now what we have is we've got all of these different groups. But if I say I want a stock that's in all of these groups, nothing's going to come up because a stock doesn't go in all of the groups. So what we want is or. Let's get our brackets there. And then change all these to or. All right. And then put my bracket in at the end. And now I'm going to add my chart list. So now I'm going to go find that chart list, which is the scan 52 weeks. I'm going to add that. And so now what it's going to do is try to find me. We just narrowed this 52-week high down, scooters under 90. But now I want to further break it down just to these 6 groups. So if I run this scan, now my 63 stocks are down to 7. And now I can put this into another chart list. I'm going to put this into, I'll just put it one of these other scans. Let's do scan results other. And now I have a chart list of 7 stocks that I think look really potentially could be great candidates. So let's bring these up in 10 per page form and let's look at them real quick. So now I've got ADP, which 52-week high. Now it's broken out, but it broke out. Looks like it had a little cup, maybe a small little handle and then a breakout. I would probably look at this and set an alert, maybe at 215, 216. If I was interested, you can set those alerts at StockCharts, or you can just keep it in here and run scans, maybe wait for a 20-day test, run a 20-day test scan against it. Then we got ANTM, Anthem. This is a great looking stock. I've talked about this one before they reported earnings, that this was one of the leaders in the space, and we found out why. A tremendous candle on very big volume. That was the heaviest volume we saw in the stock since March. And I would say dollar volume, it was probably even more than March. So it probably goes back even further in terms of dollar volume. But anyway, big move up on ANTM. I'd like to see a pullback, but if we got a pullback, anything back down near that 20-day would be very interesting. And of course, the top of this gap support, longer term, for any time we get back down anywhere close to that 400 level, I'd expect a bounce. So that's ANTM. Broadcom breaking out. See what I'm talking about? Here's a long base. And then we recently got this breakout. So a pullback to that 20-day would be an opportunity there. Broadridge, sideways consolidation for quite a while, just recently broke out. Pullback, 20-day and price support, both be around 177. Salesforce.com, really strengthening. Here was the top of a gap support like I was talking about. Notice how we came back down, never closed back below this 270 area. So we went up to 285, came back, tested that area, and then took off. When you get big volume on these gap ups, look for the top of gap support, not the bottom. That's one of the things I've learned over the years. United Health Group breaking out, looks strong here to me. Workday just recently broke out above that 285, not very convincing volume so-so. So maybe we get a pullback in a 20-day test there. But those were the 7 stocks. I mean, that's how quickly, you can take the platform and the scan engine at StockCharts and combine it with chart lists that you've already researched or scanned for, like we do at Earnings Beats. Combine the two, it's powerful. You can come up with some tremendous opportunities. Anyway, that is the scanning strategies I wanted to go over today. So take a predefined scan, but then personalize it in your own way. And that'll help you learn more about the scan engine as well as you go along. All right, let's go to Earnings Spotlight. What I'm going to do is just go through some of these stocks that have been that have reported. We'll just take a look at their results. So I'm going to start off with ServiceNow. And ServiceNow beat $1.55 versus $1.39. So a nice beat. I didn't see revenues. I'll be doing more of that research as the week and weekend pass. But I'll be adding stocks for all of our Earnings Beats members to our strong earnings chart list. I'm in the process of updating that right now. But ServiceNow, even though we got a beat on the bottom line, down $14, down 2%. Now, I still think overall we got a really nice uptrending stock. Anything back down into this 640, 650 area is pretty enticing to me. And it looks like we might be there at the open, the top end of that area. So now did beat on the bottom line. I want to take a look at the top line. EW, this is Edwards Lifesciences. I'm showing right now that we're flat today. They did report they were down after hours last night. So I don't know if that's just a misprint. Let's try that again, see if it comes up. No, I don't know. It was down $3 when I saw yesterday after hours, but they beat 54 cents versus 53 cents. Ford had a really nice beat this morning or last night. And you can see the stock up 8%. And this could be don't know if this is an all-time high, but they reported 51 cents versus 28 cents. Let me just go back here to the long-term monthly chart. Yeah, we're going to be well, if we close, we would close at an all-time high. So right now, 1670, which is this month's intraday high, is the well, it's let me go back further, because maybe back years ago, maybe it was higher. Oh, never mind. 1999, we were at 24. Can you imagine that? Think about that for a second. Ford was $24 or close to it back in 1999. Here we are 22 years later, and Ford is lost 1/3 of its value. Now, it's been a great run, but, and it's getting, I think the rising tide lifts all boats. I think that's what's going on here with Ford. I mean, clearly for me, the play is Tesla in this space. I mean, there's no doubt. Tesla is the fan favorite. But let's go back over here. And so Ford doing very well. Look at one that's not doing so well this morning, Twilio. So Twilio was expected to lose 15 cents. They actually made a penny. And your reward is you're down 15% for beating bottom line expectations. Now, maybe they lowered guidance. I didn't look at all that, but stock down 14%. Another stock that's getting hit a little bit pre-market, eBay, down 5.5% this morning after they posted better than expected earnings, 90 versus 89. But another one that looked really good after earnings is Align Technologies, expected to come in $2.52. They actually came in $2.87. And you can see the stock up 8.7% this morning. Now, those were all companies that reported yesterday. Companies reporting this morning don't have their earnings per share at this point, but I can tell you MasterCard up $7 here in the pre-market, up 2%. They were down earlier, but they've reversed. Been on a downtrend. I mean, I think they've got some more work to do. Royal Dutch is down 4.4%. And that stock's been on a huge run along with a lot of energy stocks. So probably a sell on the news kind of an event. Shopify struggling in early market action, down 4%, down $53. So this is going to be a key area for the stock. I would like to see a rebound on Shopify after the open. If it opens down around 1,300, that's going to be a key area of support. I'd like to see a big hollow candle print today. All right, and that is it for the earnings. There are a lot of earnings out, by the way, so check those out. But I want to get into the 3 you must see. To wrap up the show, I'm going to start with Plug Power. Didn't really perform very well yesterday in renewable energy, considering that Enphase Energy blew out their earnings and was up about 25%. So Plug Power, though, is right at a key resistance level. If this stock can close above 35.5, I think it's worth watching. 2 internet stocks that reported yesterday, one being Google, made the big move up, tried to get the breakout. Looks like it barely did on the close. AD line good. Be careful it falls back into this range, though, because it's had such a huge run. Twitter, on the other hand, not quite so fortunate. Twitter, big move in the other direction. AD line going the other way. This one, on a relative basis, not looking very good, setting a new 52-week low relative to its internet peers. All right, that's it for me. I appreciate you tuning in. This is my last show of the week, but on Monday, you can join me over at earningsbeats.com right about 8:45. Anytime after 8:45, come over, click on this Trading Places Live, and you'll see a link that'll take you right into the room. But Mondays and Wednesdays, I do my show there at Earnings Beats. Tuesdays and Thursdays, I do it here at StockCharts. All of the shows are at 9 a.m. Eastern. Listen, everybody have a great rest of your week. Be careful out there with all these earnings reports. Have a great weekend. I'll see you next week. Take care, everybody.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.